everybody. Clear Path Connoisseur. I like it. Good morning. John Novak says triggers are up. No reason to think shorts again after second higher divergence with the smalls up. John Novak throwing some small chart management in there. Little discretionary. Grand Rising. I love that, Andy. Good morning, Cav. Great to see you. Victor, Mike, nice to have you guys here. Gonna be a good day. Hey, Izzy. Izzy got game. I love that. I'm in such a good mood. I'm in one of those just, man, I'm happy to be alive moods. I'm going to slow roll this morning a little bit, guys. We're going to go through what we do every day. We're going to talk about what we talk about every day. Hey, Tommy, welcome to the room, man. I heard that you might be showing up. I love it. I'm Mark. I run the place. Kind of, not really. To be honest with you guys run the place. You guys tell me what we're going to talk about. You guys show me what you're doing. Guys, I just have the microphone. True story. And I am like the world's ugliest parrot. I just say the same thing every day because repetition creates recognition, guys. There are a million ways to do anything in this world, right? There is my way, there's your way, there's the easy way, there's the hard way. Guys, you've got to find your way. Not everybody in this room wants to use the most simple approach. Some of you see things differently. Where I am very right-brained, I'm very artistic. I still love a good haiku and poetry. I can cry at a McDonald's commercial. Guys, that's my personality, and my trading kind of fits that personality. It's very like it has to be a certain way, or I start to daydream a little bit. And some of you see things that I'll never see. And guys, there is no right or wrong. So what we're going to do this morning is we're going to give you a foundation so that through study and simulation and class feedback, participation, you will find your way. You will write your plan. You will create a plan that suits your needs, and it's going to be based on your ability reading the indicators. So if you're brand new with me, Tommy, you would be a prime example. I'm going to give you the easiest way to find success with the software. But before we do that, we're going to talk news. Sorry, I got on a tangent. Every now and then, I don't know why, I take it a little personally if I can't seem to help you guys find the success that you want, so I try to think of different ways to say it. One of the things I do every day, guys, is I check news. Today is Thursday, September 25th. We've already been through the high impact news, and like Victor says, it's all good news. But the wonderful thing is whether it's good news or bad news, whether the market is up or down, there's opportunities in futures trading. We avoid, I say we, it's an individual sport. I avoid high impact news because high impact news can disrupt the patterns that I'm trading. Every rule that I have for entry is a description of a pattern. It's a pattern that is testable, it's a pattern that is repeatable, and it's a pattern that I can prove beyond a shadow of a doubt, and a court of law wins more than it loses. So my trading revolves around having these patterns, and high impact news and medium impact news can disrupt a pattern. So when I see them, I choose not to trade. I go to forexfactory.com. That's where it all starts. There are two platforms that we are going to discuss today. We are going to discuss NinjaTrader. Nexgen has had indicators written for NinjaTrader. I realize mine's not open for the last 20 years, I believe. And we're also going to discuss TradingView. So one of the things that you're going to realize is that while there are an enormous amount of similarities between TradingView and NinjaTrader from the approach that we take to having advantages, they use different bar structure and different time frames, and because of that, they are going to be a different set of rules. So When you listen to my classroom, know which platform you're on. And if you're on NinjaTrader, focus on those NinjaTrader rules. Focus on those NinjaTrader reads. If you are on TradingView, please don't try to treat TradingView like you've treated NinjaTrader in the past, and vice versa, guys. So make sure that you're following the plan for your platform. I'm going to provide both. That's my promise, is I will provide both. There's NinjaTrader, there's TradingView, and my whole goal each and every day is to teach you guys to read your charts. So if you're brand new with me, we're going to focus on chart reads first. We're going to focus on using a couple indicators to identify a few advantages to be able to take the highest probability trend trade ever. Chart reading, you will find, is about 90% of your day. And that's, people like, oh, Mark, that's hyperbole, right? No, not at all. 90% of your day is probably a low estimate. 90% of your day is going to be spent reading indicators, waiting for advantages, waiting for your pattern to produce so that you can take that trade that you have proven wins more than it loses. And that's what I teach. But once you get good at that, and once you accept that every tick is not your tick, that every turn is not your turn, that every move is not your move, guys, you're a chart reader and you're latching onto advantages, and you'll understand, and you'll understand this quickly. Three really key concepts. You will understand where the market is likely to continue. That's just a fancy way of describing the entry for the high probability trend trade. Just where the market's likely to bounce and continue with a trend that you'll be able to identify. You'll understand where the market is likely to go. This is going to do great things for you in regards to profit targets. And then finally, you're going to understand where the market is likely to stop. We call these likely to stop areas termination conditions because they can terminate a trend. And the cool thing is you will know where they are long before the market gets to them, and you'll have a very simple recipe to identify them, and it will keep you from taking that next trade, keep you from trading into something that could stop the market or reverse the market, guys. And your chart reading is going to be the core of everything. So try to be a chart reader, and from that, you're going to turn into a trader, guys. So for NinjaTrader users, this is going to be our first little bit here. It's as long as it takes. The high probability trend trade, that's what this is describing. Strong triggers, no terminations, define your entry. This is a trade that typically wins 70 to 80% of the time. This is a trade that's going to teach you to read your indicators. This is a trade that, because of that potential win percentage, creates confidence through the memory of success. So for all of us, a trade is not my desire to be rich. A trade is not my need for a new Corvette. A trade is not because I have to send my kids to college, guys. A trade is nothing more than being able to identify momentum through rule number 1, having absolutely nothing in the way through rule number 2, and then defining my entry, pinpointing where that trend is most likely to continue through rule number 3. So if you learn these individually, you will piece them together to create a trade. Momentum and path. This is the two most important concepts. You have two things to learn. When you can identify momentum and you can say there's nothing in the way, you have everything you need to create a successful plan for yourself. Until you can do that, I'm going to give you what's called the KISS plan. And the KISS plan is designed to optimize your chances of success, and it revolves around understanding this one trade so that you can grow from it, branch out, and see more. These 3 rules happen on only 2 charts. Your large chart is what we call a 13-2. It's nothing more than a description of bar structure and has nothing to do with the plan. Let it be the large chart. And then we have a small chart. Your large chart is a very slow moving chart, guys. It's very difficult to see change on a large chart. It's a broad stroke of a brush, and it's kind of showing the overall opinion of the market. It takes one bar, the most current bar on this large chart, to define the direction of the market, to define the momentum in the market, and to define the areas in the market, guys. And rules 1 and 2, giving you the first 2 advantages, are found with only one bar. When they are true, You'll head over to the small chart. This is a fast chart. It's a refinement chart. Inside of that one bar, you may see 20, 30 bars. In a successful trend trade, you will see a retracement, which is a small movement counter to everything this chart is doing. You'll see probably a bounce off of an area inside of some trigger lines, and you'll see continuation down to your profits, guys. This refinement process, rule number 3, defining where the trend is most likely to continue, it will allow you to reduce risk and it will allow you to maximize your profit potential. We use 2 charts because it's important that you know who you're trading with and who you're trading against. The large chart is this snapshot of big money, however you've heard it said, institution traders, the powers that be, guys. And when they want the market to go up, the market goes up. And when they want to really push it, the momentum is strong. And when they reach key areas, guys, they're likely to make decisions. So rules 1 and 2 are keeping you in line with what the large crowd wants, guys, because the large crowd typically wins. Rule number 3 embraces the foolishness of the small crowd. This refinement chart, think of it as a small crowd. And when the big crowd wants everything to go up, they create these little retracements, these little fluctuations, guys. Rule number 3 is designed to have you pinpointing exactly where their failure is the most imminent. This is where the market is most likely to continue with everything that the large crowd wants. This becomes your entry for the highest probability trend trade. And the 3 rules are nothing more than describing this one pattern that you can prove wins more than it loses. My first hour of class has been the same for 5 years, guys, and it always begins with learning the rules. Learning the rules individually so that you can piece them together to create a trade. Everybody in the room has the ability to simulate. If you're on NinjaTrader, there is Sim 101. It is like going to the batting cages or the driving range. You can't strike out. You can't hit a double bogey, guys. All it is practice. The hope is that you practice, that you simulate, that you try to have the correct rules. And you won't as a brand new user. You will make mistakes. I want you to embrace those mistakes. But if you post your trades in the room, every trade you take, good morning, Miss Cindy, every question that you have, every chart read that you've produced, go back. If you post in my room, identify the momentum that you see, draw me an arrow. Tell me if it was strong triggers. Tell me if it was weak triggers. Identify your termination conditions and describe your entry. Tell me why you did what you did. What you're doing is you're literally saying, hey Mark, this is how I read my indicators. I love it, quick and easy trade. I saw triggers down. I saw a price on the strong side, smack in the middle of a supply zone, but took the risk. Small chart triggers rolled against me, got in with a close below, down to the bottom. Gold is weird. But way to start with a winner, right? And every time you post in my room, what happens is we're going to discuss it. We're going to discuss your chart read. We're going to discuss your entry. We're going to talk about your exits. If there's a way to do it better, my promise to you is that we will find a way to do it better, but you have to tell me how you read your indicators. That's my job, is to make sure you can read these. And when it is the perfect trade, when you have latched on to that pattern that wins more than it loses, guys, your annotations will literally serve as a recipe. You are describing the pattern that you can prove wins more than it loses. You're giving yourself a recipe for success. Even more so, your annotations, when you go back and you talk about what you saw, you may see challenges that you didn't initially see. And if you post in my room and you say, hey, this was a clear path, but the real answer is only potential, which changes the dynamic of the trade, we'll get a little clarity. We'll go back to the lesson. We'll make sure that you get where you can read your indicators accurately. So that's the first step in getting to where you want to be. If you're brand new in my room, I'm going to tell you right now, the people that post the most are the people that seem to be finding the most success. We all make mistakes. Having them identified, and then more importantly, being given a way to avoid those mistakes, to correct those mistakes. That's the key to getting to where you want to be. The second thing is we keep it very simple in this room, guys. I am a minimalist. The fewest moving parts is always the best approach to trading for new users. And I give you what we call the KISS plan. And the KISS plan is designed to optimize your chances of success as you learn to read your indicators. The KISS plan is designed to keep you focused on the best trade so that you can identify advantages. The KISS plan is not designed to be the only trade that you ever take in your life. It's designed to get you to where you can read your indicators well enough to formulate your own plan. The KISS plan tells you the 2 charts that you'll use, where your rules are found, and it gives you a checklist for entry and a very mechanical way to manage that trade. This first trade will open doors for the next trade in the plan, which is trading the potential rather than a clear path. So keep it simple and keep it focused, and know what the pattern looks like. And when you learn that pattern, the market slows down. That's the second thing that I dropped in the room. That is the spreadsheet, guys. So for NinjaTrader users, this is great. Tommy, as you learn these things, this is strong triggers. And this is rule number 1, and it's over 60 pictures of just strong triggers, and every picture is annotated. It says strong triggers because the smalls are above, there's space, and it describes why they're strong, and it describes what it means to you, and it describes it goes with rule number 1. And guys, I'm going to give you a sheet to do your own study on this spreadsheet so that you can commit these looks to memory and turn them into trades. And that just went in the room as well. Strong triggers versus weak triggers. Rules met, look for rule 2. Rules not met, sit on your hands, wait for rule 1 to be met. Rule number 2 met, not met, sit on your hands, wait for it to be met so that you can go to the entry. There's over 500 pictures of client trades in here. And guys, because it's a pattern, you will see both winners and losers. You will see the perfect trades that fail, and they will. It's a cost of doing business. It's a normal part of a positive equity curve. The idea is to focus on the process, the pattern that yields the results. The very basic management plan is up here in the lightest orange. That's straight from the KISS plan. There's a place for you to build your plan, to start putting those pictures of the trades that you want to take. And then there's a trade tracking sheet. And the trade tracking sheet, I think, is one of the most underused but most important tools that we provide here, because it goes with the idea of feedback, guys. And on your trade tracking sheet, you can post a picture of your trade. You can talk about what you saw. But the most important thing, I think, is that you go to the feedback from class section, because very often as a brand new user, especially in my life, I wouldn't realize that I was making a mistake. I didn't realize that I was breaking a rule. I had absolutely no idea that I was not embracing advantages, and it took posting in the room and getting feedback so that I could avoid the problems that I was having. So go back every day and study what you did yesterday. If you made a mistake yesterday, embrace it as a fantastic lesson. Vow not to do it today. If you took the perfect trade 5 times, found success, you're gonna repeat that. So guys, go back and do this drill. You'll be floored at how quickly you get to where you want to be. And that's really the second thing, guys. Use that spreadsheet. Take 1,000,000 pictures. The more pictures you take, the faster you learn this stuff. I like to go through and show my picture count. 8,371 pictures. And if you're in my class for more than 5 days, you'll realize that was at 7,700 something last week. Guys, I take more pictures in a day than most of you take in a week. There's a reason that I'm really good at reading my indicators, because I keep taking pictures of patterns. Become a shutterbug. So my promise, and I do this every day, and we're about to get into indicators and rules. I will give you everything that you need to be successful with this software. Promise. I'm going to hand you a plan. I already did. I'm going to give you a place to study it. I'm going to teach you the rules individually. The only thing that I can't do is get you to do the work to make it easy. And I found this. Half effort does not produce half results, guys. It produces no results. Work, continuous work, work, and hard work. That's how you accomplish results that last. And one of the biggest challenges that I face with brand new users is a reluctance to take pictures, is a reluctance to study the patterns, is a reluctance to participate in the room. And guys, you're going to get out of the software what you put into it, but you're going to see in this room today that there are people finding success with this very simple plan. There are people getting funded in our funding company with this very simple plan. And it doesn't have to be difficult or overwhelming. Just focus on the best of the best, and you'll begin to see more. So we're going to talk indicators. Both charts have areas. Areas are essentially horizontal lines, and they all have names. You're going to see Fibonacci resistance. This is a red line when the market is trending up. This is a point that could create a bounce or reversal. It could stop the market. Fibonacci support in a downtrend behaves the exact same way. It's a line that you'll know about long before you get to it. On a large chart, you'll use it for terminations, no more trades. On a small chart, you'll be able to use these areas for entries. There are divergence highs, magenta line, divergence lows, a cyan line. If you're an 80s baby, it's hot pink and baby blue. And divergence means a loss of momentum occurred. Divergence is a loss of momentum. If the buyers are in control and the sellers steal their momentum and push the market down, you'll see a magenta line. And if the market is trending down and the buyers steal the seller's momentum and push it up, you'll see a cyan line. These are lines in the sand, and on your large chart, they can stop a trend dead in its tracks. And then you'll see these yellow 1-to-1s. They're just fibs in the moment, guys. In an uptrend, they can be resistance, the same as a red fib. In a downtrend, they can be support, same as a blue fib. So you're going to see areas on both charts. You don't have to know how they come to be. Learn the names so you learn how to use them with the rules. And then this is the one that does most of the work, guys. These are trigger lines. Trigger lines are nothing more than moving averages, guys. You don't have to know the math that goes into them. There are two trigger lines. There are small triggers. These are two solid lines. Fast moving average. When they're green, they're up. When they're red, they're down. And then large trigger lines. These are a slower moving average. They'll be dashed. And when they're green, they're up. And when they're red, they're down. The same is true with the trend. When the trend is up, your background is green. When the trend is down, your background is red. We've tried to make it as easy as we possibly can. Your trigger lines will define momentum for rule number 1. Your trigger lines will define termination conditions in rule number 2, let you know if those areas have the potential to break. And your trigger lines, specifically the large, will be used to pinpoint your accurate entries for rule number 3 on that smaller, faster chart. Just moving averages, but they do a lot of heavy lifting. So we're going to break each rule down individually. I encourage you, if what I say doesn't make sense, doesn't resonate, let me know. I'll repeat it. I'll say it a different way. I'll do whatever you need to get you to where you want to be. But remember, new users, and this is my favorite picture, and I've been showing this forever. This is how day one feels to most of us. This is how it felt to me. Maybe I'm projecting from past pain, but it feels like a lot. It feels like a lot coming at you. And your brain's going to tell you, find the trade, find the trade. Where's the trade? Where's the money? The software's supposed to bring me money. Guys, learn the individual rules. It'll take you 4 days, 5 days, tops, if you learn them individually, to be able to piece these together to see a trade. By the end of 4 or 5 days in this room, you'll know that what I teach works, and you'll know that you'll need to study just a little bit to make it work for you. So, rule number 1, large chart, the big chart, the slow chart, the big crowd must have strong trigger lines, because strong trigger lines give me the advantage of momentum. And it's a pretty easy recognize. On your large chart, like we said, if the background's green, your trend is up. Red, it's down. I'm looking for rules to be met in the direction of the trend. In order to have strong triggers up, I must have green small triggers. I must have green large triggers. And in a downtrend, I must have red small triggers. I must have red large triggers, guys. If the colors don't match, you don't have strong triggers. Strong triggers is nothing more than a separation between those two trigger lines. So I'm going to use my pin here. When my small triggers break above and away from my large triggers, when there's space between the two, guys, it looks like scissors, right? And when my scissors are open, my triggers are strong. And in a downtrend, when the colors match, when the smalls separate from the large, below, when my scissors are open, I have strong triggers. Does that make sense, everybody? I love the visual. I think the visual helps. When I have strong triggers, the odds are favorable for the market to continue in the direction of the trend. This is your first advantage, being able to identify a trend and saying to yourself out loud, the odds are favorable for this market to continue in the direction of that trend. Strong triggers push a market. Strong triggers are what we look for to break key areas, guys. Strong triggers are when we're buying and selling Fibonacci support and resistance on a smaller, faster chart. And strong triggers will even cover some of the mistakes that we tend to make as new users, because it is difficult to stop this look, to stop that momentum. Momentum does go away when the scissors close, when the blades come back together, when the small triggers return inside of the large triggers, when the space is no longer present. Guys, this is what we call weak triggers. And when I have weak triggers, anything could happen up or down. And trigger lines have nothing to do with price bars. And trigger lines have nothing to do with Fibonacci areas. Trigger lines are nothing more than using two moving averages to define that the market is giving you an advantage. So strong triggers, here's a good picture. Separation, the colors match. The odds are favorable for the market to continue in the direction of the trend. Weak triggers, let me go to the other picture. No more separation, no odds favorable momentum. Anything could happen up or down. And guys, it's not a coincidence or a surprise at all that 4 out of 5 reversals came with weak triggers. So rule number 1 is pretty simple. It's just separation. Is everybody good with that? Because when you have momentum on your side, guys, it is like a freight train. It's like a semi going down the highway full throttle. And it's going to be hard to stop unless you hit a termination condition, guys. All the momentum in the world probably won't save you if there's a giant brick wall in your way. Termination conditions can stop the market. Termination conditions can create untradeable bounces. Termination conditions can halt forward progress and pull money right out of your account if you choose to trade into them. So we're going to insist that there are none as a brand new user. We're going to make sure that we have room to profit targets, and there needs to be what we call a clear path. And this is the second of the 2 most important advantages you will ever learn. Areas on the large chart. Horizontal lines on the large chart, guys. These are the areas that could be termination conditions. These are the areas where the large crowd is most likely to make decisions. This is where buyers buy, where sellers sell, where fights between the buyers and sellers occur, where profits are taken, guys. They know about these areas. They respect these areas because it's the movement in the market that has created these areas. So there's a pretty simple recipe. Anytime price reaches one of those horizontal lines. This is the only reference for price, guys. When price reaches the area, the decision making is set into play. So when price reaches the area, we're done with the price bars. We no longer look at the Renko bars. It doesn't matter if they're a tick above, a tick below. Your trigger lines will tell you 100% the story on the area. So if price reaches resistance, that's what the one-to-ones are behaving as here. I want you to count your triggers. If 0 trigger lines, both small and both large, have made it above the area, or you could say if all your trigger lines remain below resistance or above support, you have a termination condition. This is how it's defined. Assume that the area will hold. Assume that there will be a bounce that pulls money out of your pocket, guys. Assume that any trade that you take into that area with no triggers through is a definite loser. They'll win every now and then, but they will lose more often. Look at this right here. Price reaches 1-to-1s. Guys, this is from a live market picture. Look how the market hit it to the tick and dropped all the way down to Fibonacci support. If you go into every day believing termination conditions are going to cost you money, it's going to keep you from losing money into those areas. When two of your trigger lines, both small, get above an area of resistance, below an area of support, guys, you can say, hey, guess what? The screen is frozen. Thanks, Pete. Let me refresh it real quick. Boom. Better? There it is. Cool. You're welcome. Guys, always let me know if you can't see or can't hear. When two of your trigger lines, not price bars, but two of your trigger lines get above resistance, you can say, hey, with all of that momentum, and you got to have momentum, this is an area with the potential to break. But I'm going to tell you, for the brand new user, for the newbie, for the youngling, whatever you want to call yourself, for the amateur, two triggers is not your best look. And my job in this room is to teach you the best of the best, the highest probability, embracing the best chance for success. And that begins when 3 of the 4 triggers make it above the area, when 3 of the 4 trigger lines make it below Fibonacci support. With momentum and 3 triggers through, this area is more likely to break. The breakout of the Fibonacci area is more likely. The second trade on your plan revolves around having 3 triggers through an area and all the momentum, and there's a trend trade that you can take, hoping that that area breaks. It's still not a clear path though, so it's only potential. And because it's potential, it's important that you get your management hat on, because 3 triggers does not guarantee a break. When 4 triggers, both smalls and both large, make it through the area, guys, that area is broken. That area of resistance is now behaving as support. This line is no longer a factor in anything you do. It's in the rear view mirror. 4 trigger lines through an area is a clear path. And your clear path remains intact until you reach the next area. And when you reach the next area, you've got to pause. So this is a great example. First it's a termination, then it's 2 triggers, then it's 3 triggers, then it's 4 triggers. And guys, Fibonacci is freaking amazing. Does everybody see how the market came back darn near to the tick and retested the broken resistance as support before it continued off? Right to the next area where weak triggers and none breaking creates the reversal in the market. If you scroll back and just look at how often these areas create problems, how often you get big untradeable bounces that dissect them, how often they hold the market, you'll begin to realize and learn that there's just no reason to trade into it. I've got all the momentum I could ever hope for, first bar. I've got 2 triggers through, not my best look, only the potential, not a clear path, guys. And there will be times, and this is kind of a bummer for a lot of you, there will be times where you may have 1-to-1s followed by a fib, followed by divergence, and you're going to get frustrated that you can't find a trade. You're going to get frustrated that it seems stacked. And guys, I'm going to tell you, the futures markets trade billions daily. Billions. It only takes $400 a day. That's it. $400 a day is a 6-figure income. $500 a day is a little over that. I don't know where it's at on the website yet, Jerry. John popped it in there, but it is right at the top of that Word document, the KISS Plan for Trading View. You can get it there. And if you need any help, let me know. But I love that you guys are latching on to the simple. You're welcome. It doesn't take a lot of money to be a successful trader, guys. And now there's these things, especially if you're a Nexgen Pro Trader funding, you can copy up to 5 accounts, which means that your $400 a day suddenly becomes $2,000 a day, puts you in that $500,000 a year scenario. And there's no doubt in my mind that if you spend any time in my room at all, you'll see that potential for $400, $500, $600, $700 pretty easily each and every day. And you'll see Nexgen clients, some new, some old, posting that in the room, finding that success daily. So learn these two advantages so that you can go define an area. Is everybody good with momentum and path? The large chart's done, guys. The large crowd has told us everything that we need. They've given us all the momentum we could hope for. There's absolutely nothing in the way. Now we're going to define the pattern for entry, guys, and that is very specific. You're going to use a limit order. That's how precise it is. You're going to wait for the market to come to you, and you're going to buy or sell a pullback, that little fight by the small crowd, and you're going to do it at an area, at a fib, at a mid band, at a yellow 1-to-1. If you're a note taker, that's your list. At a fib, at a mid band, at a yellow 1-to-1, and those areas must be inside of the large triggers. On your small chart, you will see two sets of large triggers. You'll see these smooth triggers. These are native to the 5-1, and if you use them in comparison to the small triggers, you can say to yourself, I have strong triggers on the small chart. You also have these stepped. You're not my real trigger, this is your step trigger. And the step trigger is the large trigger from the large chart. And there's this amazing phenomenon that happens with moving averages, is that price returns to large triggers. It tends to pull away and snap back, and it pulls away and snap back, and it pulls away and snaps back, guys. And this is a mathematical term called regression of the mean. I had someone smarter than me tell me that. And because there is a regression of the mean, we're going to use trigger lines to define the retracement zone where the market is most likely to pull back. So when the rules are met on the large chart, you back up one. When I have the advantage of momentum, when there's nothing in my way and my path is clear, I've got room to make money, on a smaller, faster chart, I'm going to use a limit order to buy or sell a pullback in an area inside a trigger. So here's your pattern. When the large chart rules are met, your small chart will be trading something like this, flying north. Has anyone ever heard the phrase fear of missing out? The feeling that you're never going to get a trade, the feeling that the market's going without you, FOMO, the idea that you're never going to get paid. Guys, with day traders, the fear of missing out is real. And as you wait for your entry pattern, you're going to feel it. Remember, this is a pattern. This is a pattern that repeats. And just about the time you're sick of waiting and jump in, you get the reversal bar. And the reversal bar is the beginning of your entry pattern. The reversal bar is the start of the fight. It begins the pullback. The reversal bar is not your entry. The reversal bar is actually a little loss of momentum that hopefully pushes you back to your great entry. When the reversal bar prints, and with a little bit of practice, long before the reversal bar prints, you will look for your large and synthetic triggers, and you will say to yourself out loud, the market is most likely to retrace, to push down, to return to these large triggers. So large triggers define the retracement zone. But large triggers aren't bouncy. Areas are like that brick wall that create a ricochet with your tennis ball, guys. So reversal bar, define regression of the mean in 4 different languages, Victor. I like it. Trigger lines define the retracement. Areas define where it's most likely to bounce. Sometimes you'll have 1, sometimes you'll have 5, guys. Each area is equally as important. A mid-band is not stronger than 1-to-1s. 1-to-1s are not stronger than a fib, but the key is that they are inside of that retracement zone. And you're just going to activate your limit order. You're going to wait for the market at the highest point of support for a long trade, closest to the reversal bar. Because remember, your large chart is flying up. And there's nothing in the way to create a bounce. We're not expecting that small crowd to get too deep in. So we're going to activate a limit order. This becomes your entry for the highest probability trend trade. Anything below the triggers in a long trade, guys, any line, any fib, any mid-band, any yellow 1-to-1 that is below those trigger lines, beyond the retracement zone, this is not a part of your entry. Once you get to what I call the wrong side of the triggers, below the retracement zone, below the areas likely to create a bounce, this is where the advantage of rule number 3 is no longer in play. This is where I no longer have an edge. And guys, no entries are taken from the wrong side of the triggers because you don't know if, when, or where that market is going to continue up. And remember, I'm talking to my brand new users. This is your foundation designed to optimize your chances of success. In a short trade, when the market is down, when the momentum is strong, when the path is clear, we're going to wait for a reversal bar. The reversal bar signals the beginning of the fight, the pullback, whatever you want to call it. You will know where that fight or pullback is most likely to retrace based on your large and synthetic triggers. This is your retracement zone. This is where it's most likely, not obligated, but most likely to go. The areas inside, fibs, mid-bands, yellow 1-to-1s, are where that market is most likely to bounce, where the market is most likely to continue in the direction of the large chart advantages. This is one of those magical moments where there is one line inside of triggers. Your limit order will go just below that line, below that area, closest to the reversal bar, and this becomes your entry for the highest probability trend trade. And guys, any lines, fibs, mid-bands, yellow 1-to-1s on the wrong side of the triggers are not a part of the entry equation. This is where the market should not go. This is where the advantage of rule number 3 is no longer in play. You don't know if, when, or where that market's going to continue down once it gets too far past those triggers, which is why you're going to use your amazing entry rules defining where the market is most likely to continue, and it automatically defines where the market should not go. If this is going to be a winning trend trade, the market should not go 4 to 5 ticks beyond those trigger lines. And this is a pattern that you can study, that you can test, that you can prove typically wins up to 70 to 80% of the time, which means 20 to 30% of the time they're going to hit your stop. But because of the precision of entry, it minimizes your losses, guys. You'll know where your stop belongs before you ever enter the trade, and it's okay. Those are acceptable losses. Losing trades is a part of doing business. Losing the correct trades, the ones with the advantages, the ones with the great entries, the ones void of hope, guys, I will take that all day long, and I know exactly where they have to come get me. I refuse to be stopped out where the market is most likely to continue. This is your first stop in the KISS plan that I gave you. And when the market confirms the move with a reversal bar in the direction of your trade, you will minimize risk. A couple ticks above that reversal bar. And it's not uncommon to watch you guys buy nearly the low tick or sell nearly the high tick and have $30 or $40 of risk on a trade. Doesn't guarantee that it's going to win, but guys, $30 to $40 losses per contract are unheard of in this business. So your job as a brand new user, give it 20 trading days, your first 30 days with me. Recognize the pattern. Done, goal for the day, Cav? Do you ever get tired of saying that? Because you sure say it a lot. No, how could you? How could you? Guys, when the large chart says up, when the large chart has momentum, when at least 3 triggers are through that fib and there's room to the next target, the market is trading at 97.05. The market is trading all the way up here, and that fear of missing out is real. This is where the pattern starts. There's your reversal bar. There's your large and synthetic. There's your areas inside, guys. If you scroll back historically and circle these tails on the large chart, and what I'm doing right now is I'm teaching you how to study. If you have momentum and you have the potential to break, I'm looking for at least 3 triggers, and you circle that tail with momentum, with a clear path, go to your small chart. And I don't remember what this one looked like, so we're about to find out. Whoops. It was a pullback to areas inside of triggers. And do you see how it never got where the market shouldn't go? And with all that momentum and path, it continued right to trouble. And guys, this is your trade. This is your pattern. And it is the same look every day. The pattern is the same look. It repeats on every market. Pull back to the area inside of triggers and bounces. Pulls back to the area inside of triggers and bounces. Pulls back to the area inside of triggers. Finally pushes up a little bit. And guys, it's just a pattern. So your job is to learn the pattern. The pattern is consistent. The pattern is testable. And if you go through client trades, you're going to see this pattern repeated over and over. Momentum, potential to break, pull back to the area inside of triggers with the exact same checklist I gave you today. This picture is from 2022, my friends. All you're learning is a pattern that's been repeating itself for as long as I can remember. Are there any questions about that high probability trend trade? Are there any questions about identifying momentum, separation between the small and large, about saying to yourself, I'm below trouble, I haven't reached trouble, and if that market retraces, I know exactly where the retracement is most likely to occur using my trigger lines. And give me a why if you can see that there are no areas inside of that trigger, that there are no fibs, mid-bands, or yellow 1-to-1s inside of that trigger, that the only areas are on the wrong side where the market shouldn't go. Ladies and gentlemen, rule number 3 in the event of a pullback is not met. You don't have the advantage of an entry area on this particular look. Large chart rules are met, small chart rules are not. If you are a brand new user, it's okay to say, damn it, not my trade. There will be more. There's always more. They trade billions every day. Pete, you're in this short? I like it. Pete's probably in this short either from the area inside of triggers up here or from just below those 1-to-1s right here. We'll find out because he's going to post it in the room and tell you why he did what he did. Great job, Pete. All right, guys. So, Tommy, that's day 1. Who else is new in here? I know I've got a list of names, but I don't see all of them. If you're new, if you are not finding the success that you need to find on NinjaTrader, guys, this KISS plan is designed, and it is designed with intention to give you everything that you need to be successful with this software. All you've got to do is learn these rules, learn this pattern, and then grow from that point. That's the KISS plan, guys. That's the NinjaTrader version. Now we're going to go to TradingView. Maybe. I feel like. Uh-oh. I locked up here. Hold on just one second. Can you guys hear me? Yes? Okay, just making sure. My PowerPoint froze on me. So I'm going to end that task real quick and bring it back up. Just wanted to make sure, guys. I get sad when you guys miss out on me because I'm a lot of fun, right? Let's get that slideshow going again. And let's start with TradingView, guys. So we made it through NinjaTrader. And guys, we made it through NinjaTrader in 35 minutes. 35 minutes to give you everything that you need to be successful with the software. 35 minutes worth of rules, 35 minutes worth of patterns, 35 minutes, guys. This is your core, this is your base, this is your foundation. Before we do the TradingView stuff, I'm going to one more time, I'm going to give you the NinjaTrader KISS plan. I'm going to give you the NinjaTrader tracking sheet. So those both go in the room. And then also, I'm going to give you these, guys. I'm going to give you this document. This is the Trend Trade Simple document. Chris Novak challenged me to put everything I teach in the smallest document possible. This is 2 pages describing the education process, reminding you that the core is momentum and path. The rules we use, the charts you find them on, the indicators defining momentum, defining termination conditions, what it looks like when termination conditions break. My favorite picture in here, sometimes your path isn't clear 90% of your day. The markets average 220 billion hourly. You don't need to be in every move to be a successful trader. And then also on here, where did it go? That's not it. It covers the entry sequence and teaches you how to study. Everything that you need to be successful with this software, guys. I would encourage you. Keep it basic, keep it focused. And now we're going to do the same thing. Everything that you need to be successful on TradingView. Everything that you need to have the advantages in place to take the highest probability trades on TradingView. TradingView indicators are the same as NinjaTrader with the exception of Fibonacci. TradingView does not have Fibonacci. We haven't been able to program it in yet. So John Novak did an enormous amount of research, and he found a company, a third-party indicator delivery system called ChartPrime. And ChartPrime offers supply and demand. And these guys are pretty freaking amazing. I couldn't imagine trading without them. It is all of $50 a month, I think, with the discount. And guys, these supply and demand zones will behave like Fibonacci. Don't trade into them. They'll act as support. They'll act as resistance, guys. These ChartPrime zones are pretty outstanding. Two charts in TradingView. There's the big chart and the small chart. There's the 15-minute chart and the 1-minute chart. The 15-minute chart will define direction. It will let you know how to feel about momentum. It'll define key targets and terminations, guys. The large chart leads the way. You'll notice on the large chart, I don't have background colors. On the large chart, I don't have large triggers. I don't need them to be successful. Your 1-minute chart will define the immediate strength. It will define turning points. It'll define entry points. 1 minute is an entry chart. 15-minute tells you when it's time to look for an entry. Same reason, you're not in charge. Driving force, big picture, just an entry chart. So how to read the 15-minute chart. And I'm going to tell you, I watch people trade all day long. Has anyone ever heard that the trend is your friend? I know, what a cliche, right? Guys, trading with the small triggers. If the small triggers are down, looking for rules to be met to go down with them. If the small triggers are up, you're looking for rules to be met to go up with them. And it really is that simple to define direction. It's either up or down. And if you can't tell, well, then you don't have a clear advantage. Once you define up or down, you're going to ask yourself, maybe in an out loud voice, teach your pets to trade. Where is the current price, the highlighted price, in relationship to those small triggers that are up? There's 3 options. Price can be left of those small triggers. That's the strong side. In a downtrend, it's left of the triggers. In an uptrend, it's left of the triggers. Price can be below to the right side in an uptrend, or above to the right side in a downtrend. Just because the market's going up or down, it doesn't change left or right. That's the weak side of the triggers. This would be that anything can happen look. And then it could be transition. It could be right there in the middle of the triggers, not above or below. We call this transition. And the relationship of price to these triggers is your first step in management, guys. And if you are left of the small triggers, if you're on the strong side of the small triggers, this is where 1 minute areas are most likely to break. This is the look where you typically hold for bigger moves. These are your home runs. This is the same look that you have to take any trade that's based in momentum, because that's where momentum is the strongest, from the strong side. The transition, you're losing that momentum a little bit, but it's still pretty good. You're going to be aware of 1 minute areas. You're going to be ready to manage. You're going to get to break even. This is kind of a medium probability scenario. If you are to the right, to the weak side, guys, this is where reversals in the market happen. This is where uptrends turn into downtrends. This is where downtrends turn into uptrends. You're going to be hyper aware of 1 minute areas. You're going to manage very assertively. You're still looking for long trades, but you're looking for them with a little bit of a guarded hand, making sure that you have room, making sure that you're managing assertively. And then finally, once you define momentum, just like we did before, are there room to targets? From where the market is trading, from where my entry is going to come from, do I have room to the next trouble spot on the large chart? And guys, this has to happen. It's going up, it's on the strong side, I have room to targets. Now and only now will I go look for an entry. There are two types of entries. I hope this is easy to read. Maybe I need to put like a divider in the middle. Your first entry, and the least common entry, is what we call a momentum style entry, guys. So the best of the best, highest probability, best chance of success for the momentum entry is 100% dependent on being on the strong side of the small triggers on your large chart. And then if your small chart also has strong triggers, smalls above the large, space between, that same Ninja Trader lesson, you can activate a limit order, write it an area, and hope for a quick bounce and continuation with momentum. This is a low risk trade because you're going to hide your stop behind whatever you're hoping holds. This is a trade that typically sets up, I would say maybe 20 or 30% of your trades might be momentum style trades. They're very low risk and they do fail. But you're just taking a shot at momentum is what you're doing. When they fail, when the small triggers turn, when you no longer have momentum, guys, you're not looking for the momentum trade anymore. Once the small triggers roll against you, you go into what we call the trend trade style entry. And the trend trade style entry is a pullback to a mid band, to a zone, to an area. But you don't enter at the area. What you're waiting for is for price to get to the weak side of the triggers that have turned against you. That's the immediate momentum. So if you enter right at the area, you run the risk of getting absolutely flattened. You're waiting for a bar in the direction of your trade that finishes on the weak side of the triggers. And we call that a close on the correct side of the triggers. And that is typically where the market continues in the direction of the large chart advantages. So for the momentum trade, rule number one, only 3 rules. Once again, guys, keep it simple, keep it focused. Rule number 1 says no terminations or zones on the 15-minute. We're assuring ourselves that we have a clear path, that we have room to make money. Rule number 2 says that the 15-minute must be on the strong side, that odds favorable, that best of the best momentum look. This is going to increase the likelihood of success. This is, again, guys, a stepping stone, not the only way to do things. Your 1 minute must have strong triggers. That's the non-negotiable in this trade. Without the advantage of momentum, guys, momentum trades rarely work. Funny how that happens. And you're going to use a limit order to buy or sell that pullback at the HVA or the area. And it's going to look just like this every time you take the trade. The smalls will be up. You'll be on the strong side of the smalls. There will be nothing in the way. Then and only then do I go to my smaller, faster chart. I have to have momentum. This area needs to break because when resistance breaks, it behaves as support. I will wait for the market with a limit order right at that zone. And guys, that is my momentum trade, hopefully taking me off to profits. That's your first trade. That's not the most common trade. The most common trade is the trend trade. This is the one that you're going to see more often than not, guys. And the 15-minute is not trading directly into areas. Does it sound like a broken record? Don't trade into things, don't trade into things, have room to targets. Guys, there's a reason for that. 1 minute not trading directly into areas. Now this is pissing some of you off. There's areas everywhere. Guys, there's not. There's just areas there when you think you should be in a trade. For the brand new user, don't trade into areas if you want the highest chance of success. Rule number 3, buy or close on the correct side of the small triggers at the 1 minute mid bands or areas. And it looks exactly like this when you take a trend trade. Smalls are up, and at the time of the trade, you're in the transition side of the triggers, and there is room to the target. And look at how it works. Without the breaking of the area holds. That's okay. The triggers roll, and it pushes all the way down. And guys, I'm going to give you a little heads up. With Victor's help, I recognized this, and then he recognized this, and we both got caught. The rules say pull back to an area, and you're going to get head faked at least once. They're going to give you that fight, that try, that push, but it's not from the area. Sit tight, be willing to miss it as a brand new user. There's your area, there's your close above. And I'm embarrassed to say, I took that exact entry yesterday, got stopped out, and then my winner, I only got to keep half of those profits. That was an avoidable loser. Triggers roll, pull back to the area, close on the correct side of the triggers. And guys, that's TradingView. It's only 3 rules. It's only 3 rules. It's only 2 charts. So for my TradingView users, I'm going to give you the TradingView KISS plan. Minimized workspaces, how to read your indicators, 2 types of entry, and a checklist for entry, guys, to make sure that you know exactly what it looks like every time you take the best of the best trades. There's also the trade journal. You can study your core looks. You can go through and you can say, all right, I'm going to take pictures of direction. I'm going to take pictures of current price so I know how to manage. I'm going to take pictures of a clear path. I'm going to take pictures of a termination condition. I'm going to get them into the spreadsheet, commit these looks to memory, and I'm going to study these. And guys, these looks aren't designed to be the only thing that you do with the spreadsheet. Put some time in. Put your own pictures in. Drop them in the room, and then embrace that trade tracking sheet, guys. So I'm going to put both of these in the room for you real quick. Hour flew, didn't it? Time flies when you're having fun, guys. And trading should be fun. Trading shouldn't be stressful. There's your journal. Almost there. There's your KISS plan. All right, so as I head into my first break of the day, there's 2 things, maybe 3, probably 8, because I have trouble leaving, that I'm going to do. The first thing is I'm going to remind you that you now have everything that you need. If you're brand new, you've been given rules. You have the ability to simulate, but more importantly, guys, you have the ability to get feedback, to know what you did right or wrong. You have to accept the feedback, guys. I don't judge you on your trades. I'll never send you messages privately asking what the hell you thought you were doing. But post in the room. Make sure you're reading your indicators properly. Don't practice the wrong trades. One of my least favorite phrases is people go, yeah, but I made money. Guys, the goal isn't to make money once. The goal is to make money every day for the rest of your life so you don't have to go to that job. And short-term victories, lucky wins, tend to translate into long-term failures. So I will tell you, if you got lucky, keep it very simple as a brand new user. There used to be a section on the website that said high probability trend trades your first 30 days and beyond. Taking the best of the best. Yeah, Cav, you definitely got time out. Taking the best of the best. Learning how to make money the easy way, and then expanding your plan. So guys, if what you're doing right now is not serving you, if what you're doing right now is not producing more wins than losses, if what you're doing right now is not creating victories, getting you funded, what you're doing might need an overhaul. You might need to go back to simplicity. You might need to go to something that you can prove wins more than it loses. And guys, both of these KISS plans, the one for NinjaTrader says up to 70 to 80% of the time. I'm working on stats, and this probably feels like a little bit of a brag, and I apologize. I bought an account on Monday with Apex because I needed that little keep me focused. And I'm at 70% winners following the KISS plan so far. 70% winners so far. Through 3 days of trading, up almost $2,800. But it's not the money, it's the process, guys. It's the process that yields the results. Great stats, right, Jen? And it's boring. It's so boring, guys. My average trade is 1 minute and 33 seconds, which means in 3 days, I've spent about 45 minutes actively trading. That's it. That's TradingView only. I bought an Apex account because I wanted to have something outside of Nexgen Pro Trader funding because I don't pay for those. So for me, it feels like simulator. Yeah, so that's Tradeovate. There's a reports tab, Jen, off to the side. Do you know how to do that? I'll show you real quick. Oops. If I could learn how to spell, Jen, I've got you. Here you go. So when you sign in, and it has you access simulation, this drop down lets you know where you're at with your trailing drawdown. And Jen, I'm going to tell you something. I quit giving a shit about this number because when you're winning 70%, it's going to be hard with good management to hit that drawdown. I have relaxed completely on that and not overthought it. But over here where it says reports, you can do it for the day, you can do it for the week, and all you got to do is click go, and it gives you a full breakdown of everything. It talks about your wins, your losses, your percentage, your biggest losses, your biggest winners, the time in the market, shows you everything that you need to see. It's neat. I like numbers. I like stats. So guys, you have what you need. You have your plan. You have your checklist. Put the work in to make it easy. Put the work in to make it simple. Put the work in to give yourself those advantages. And if the work you're putting in right now is not yielding results, give me a message, right? Post it in the room, guys. One of the biggest things that I see from people that are suffering, that are struggling, that are angry, is it's not that they can't. It's that they have a misunderstanding of what it means to have momentum, or maybe they're not completely clear on a clear path, or maybe they're not defining their entries as accurately as they could, and it's usually a very easy fix. That all I need to know how to fix what's broken in you, what's not serving you, is just a picture. Tell me how you're reading your indicators. And it's tiny little fixes, guys. It's tiny little things that you don't notice that I will, because I've been doing this for so long. And I don't have any anxiety. I don't have any nervousness. I don't have any connection to your trades, guys. I'm looking at a still chart. So as we get into the next hour, I want to give this, and now I'm leaving. Don't yell at me, guys, that think it's funny for me. I never leave. The key to everything that we do in this room is having a foundation, and then understanding those very basics, those very core rules, and compounding, growing a little bit each day, each week. So for you brand new users, I blanket with very conservative rules, recognition of advantages, a solid plan that optimizes your chances of success as you learn to read your indicators. So for new users, all termination conditions are bad. And no momentum is bad. And areas beyond the large triggers for entry are bad. They're blanket rules, guys, because they increase the likelihood of success. They're not always bad. And you'll realize that as you grow with the software, that once you understand the core, when you can look at a chart and literally say to yourself, hey, I'm looking at this chart, I have this, I have that, I have this, it's high probability. You instantly open the door to understand how to take trades when one is gone, to manage assertively. Some of you will even learn how to take trades in low probability scenarios because of a pattern that you recognize, guys. So work on the advantages. And just like anything, the more time you spend with it, the more you're going to see. The doors begin to open. I'm not shackling you to a basic plan, guys. I'm giving you a solid foundation to grow from. You've got to learn the process that yields the results. This is from Mark Douglas, guys. When you learn the process, when you focus on the process and not the money tends to follow. And that's where the KISS plans come in for both platforms. If you can keep it that basic, if you can follow very simple rules, and you're okay in the beginning, not looking for all the trades, only the best trades, you can find an extraordinary level of success. Now, if you're in this room right now and you've had any struggles in the last month, ask yourself, am I keeping it simple? Am I chasing the money? Or am I following the process? Don't answer in the room. I already know what the answer is. You already know what the answer is. You have to make the decision to do something that serves you better. I've watched it over the years, guys, and the further new users deviate from simple, the more you chase the money instead of the process, the longer it tends to take you to get to where you want to be. So question everything. This is my going into the second hour. I encourage it. I want you to learn, but give yourself a little grace. You're new. It's okay to be. Guys, this was the response to an email that an angry demo user sent me. Mark, this is absolute crap. People in the room aren't following the rules. Guys, nobody in this room is obligated to follow my plan. My plan is there as a, I don't know, as a courtesy to giving you something that you can follow, that you can be solid with, right? It's a base. Everybody's different. Everybody sees things different. You're going to see that as we go into the next couple hours. And what I want you to do is not play the trade police. Understand that every chart presented, I will talk about momentum, path, and entry. And if you knowingly violated momentum, path, or entry, guys, I'm not going to put you on trial. I'm going to point it out because this is an educational room. And I would just want to make sure, hey, Pete, I noticed you didn't have a clear path. Did you recognize it and manage assertively? And Pete's like, yeah, of course. I've been doing this for a long time, Mark. And I'm like, I know, but I just said that for the class. He's like, cool, no worries. You control the entry, guys. And Pete posts right there, probably into a termination condition, right? Just kidding. Yes. He went short, right into a fib. Right into a fib. Didn't work either. Didn't work. That's Pete's right. And Pete says, crazy trade worth the funny money. Guys, practice like you want to play. If you're brand new, your brain doesn't know the difference between crazy low probability trades and high probability trades. All it knows is the dopamine kick. Short-term victories, long-term failures. You'll get to a point to where you do stupid stuff on simulator because you're so ingrained in your plan that it doesn't affect the big picture. If you're not there yet, it will affect the big picture more than likely. So guys, I'm going to go away. I'm going to come back. That's crude oil. And this is one of those instances, guys, where you were just a shade outside, right? And you might say to yourself, with this look, I'm willing to take that trade, or I'm willing to take that trade with a reversal bar. That's a great example. I'll leave you guys with crude oil. I'll be back in 5. When I come back, we're going to click on every picture posted. We're going to talk about every picture posted. And if we get a chance, guys, and the rules are met, we'll take some trades and have a good time. So I'll be back in 5 minutes. Here we go. Andy, he said for you to take over the class. Alright guys, I'm going to scroll up to the very top. And I'm going to click on, there are a lot of pictures presented this morning. I want to remind you guys, I'm not the trade police. I don't want to be the trade police. We're going to talk about momentum, path, and entry on everything presented. If for some reason I miss a picture of yours, just let me know. It's never intentional. But it happens sometimes. Dun, 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 dun. So we're going to go through. And guys, because this is how I do it, it's really important that you annotate your charts, that you have conversations with me on your charts, because it's going to be difficult for me to go back and read your annotations in a chat box that I'm scrolling through. I really need you to be writing on your charts, telling me what you see. Man, we got a lot of pictures today. So you folks that are new, I think this is what makes the education room so awesome. Because this is you guys presenting and asking for feedback and doing great things and seeing advantages and taking things next level. And whoa, even Jen found a Ninja Trader trade in there. So almost there. I can't believe how many we have. Holy smokes. Almost there. Almost there. My goodness. You don't hate me if you miss my pick. John, I hate you no matter what. You're my sibling. I'm obligated. Not really. All right, guys, so we're going to talk about everything. I'm going to read your annotations. We're going to go through it. We're going to look at it. This is my favorite part because this is the same process that I went through as a brand new user. And it was John Novak. Thank you, John. It was John Novak that looked at my charts and read my annotations and said, hey, Mark, here's how to do it better. Here's how to avoid that mistake. Here's how to get a better entry. Here's how to reduce your risk, guys. And I'm just paying it back. This is me helping you. So Paul says, if it gets to the mid-band and a bar closes below the small triggers, all this stuff below is in the way. However, 15-minute is clear to the border. So Paul, one of the things about these trades, and I know that not trading into areas is frustrating a lot of people right now. There's so many zones on that chart. How am I supposed to take trades? So Paul, the close below is directly into trouble. And guys, this is for all my trading view. The next bar that closes has nothing but blue skies, right? This one says, ooh, that could create a bounce. This one says, I'm past the thing that creates a bounce. Guys, it's still a trade. Hide behind that zone. Take that trade. Run with your large chart. Does that make sense? Guys, this is a great opportunity. Now, it's the difference between I want to get in here, but it makes more sense. My advantage is here. And Paul, this is such a great large chart read. Okay, so let's talk about that. Larger stop. What makes more sense, Paul? Trading directly into something that could create a bounce, or waiting for that area to clear and hiding behind the area that didn't create a bounce. It's the same risk. It's the same risk. Hide, right? Because clearly this area doesn't want anything to do with stopping the market. Put your stop behind it. Does that make sense, Paul? And I think this is going to help alleviate some of the challenges and frustrations that you're feeling. All right, next one. Classic high probability trend trade, strong bottom, trigs up, everything strong, pull back to the area in the retracement zone, easy money up to the fibs. Absolutely beautiful, Pete. And what's funny is, guys, I clicked on 75 pictures. I'm going to know who most of you are by your postings. If for some reason I call you the wrong name, just let me know. Or just suck it up, right? Go with it. Strong top, all the momentum, breaking all the terms. And Pete says, you know what? I've got room to that one, so I'm just going to jump the fudge in based on all that momentum. I'm going to get out one contract at the thing that could create a bounce. I know right where the market is likely to go. Let me get paid. But if it doesn't create a bounce, I'm going to make more money. Pete, expert. Letting momentum and path lead the way. You guys are going to hear that a lot today. Letting momentum and path lead the way. Letting momentum and path lead the way. When it hit the mid band, guys, price returns to the large triggers. It did it. After it did it and headed back down, Pete said, egads and little fishes, look at all that momentum. I'm going to jump in when my triggers roll, and I'm going to get out of trouble. Once again, Pete, rock star. Taking very basic concepts, turning them into beautiful trades. All right. Termination condition, triggers roll, and so Paul, another good one. Trading directly into the zone doesn't make sense, right? Doesn't make sense. But 2 bars over is where your HVA rules were met. 2 bars over is where it closed above the triggers, above the zone. And once it did, Paul, you had all the room. So I know you like this entry, right? You love the white paint bar entry. You're a big fan of the white paint bar entry. What's changed 3 bars after? Absolutely nothing, except your large triggers rolled. Everything is still going up. You're above the trouble. Giddy up, right? Just a little pause. Just a little pause. You still have almost all the room that you had before. It was into outer bands. Right on. It's because you're an extended market. This one even closed above the outer bands, right? So maybe it is, maybe it isn't. But Paul, let's get that on the radar. Let's get that on the radar. And I think that you'll be happy. And why is it on the radar, Paul? Because look, there's your close above. And look at the area. It held it. 100%. That's why we don't trade into areas. Because it's more likely to do this than it's not. And sometimes it's just not your money. But I think that we're going to find a ways through a little bit of chart reading. You're going to find a way to kind of take it next level to say, man, my large chart still has so much room. Let me just get in on the other side of trouble on that small chart. And guys, this is one of the great things about this room. This is my favorite thing about this room, is that if you just express what has you upset, if you express what your challenge is, if you let me see where it is that your frustration is stemming from, guys, there's probably an easy fix, a solution that works out well for you. All the momentum in the world directly into a termination condition, and sometimes, guys, what do they say? Sun shines on a dog's butt, right? Pete traded from a bad bottom directly into termination. No room to make any money, and he still made money. And is this the highest chance of success? Of course not. More often than not, especially with a bad bottom, that area is going to hold. Pete took a calculated risk based on momentum and got paid right at the thing that could ruin his fun. Pete, exercising your right as a chart reader. Nicely done. Everything says down, weak side. There's your pullback to the HVA with the smalls below the large. And then, Paul, this one's just tight, right? And what the annotation tells me is that you're frustrated. From the mid-band HVA area, nothing but areas in the way can enter. And I get it. And sometimes it's stacked. And when the market's been consolidating, it's definitely going to be stacked. And that's one of those times where you take and manage, where you say, I know, John is the king of take and manage. But if you sold the HVA, you had 9 points to get down to the 1-to-1s with every indicator down. So sometimes getting in at the area may be helpful. Strong triggers tend to break lines, not guaranteed. And remember, guys, this is where I go back and say that the plan that I put in front of you is the most basic plan to help you find success as a brand new user. I don't believe there's anybody in this room that isn't going to grow outside of it in some form or fashion. But when you know what's good and what's bad, it makes it easier to make decisions. All right, so you say this was your entry. Everything's down, Paul. Let's talk about great entries save lives. You closed below right here, not right here, right? So you had room, stop is safe, the area did create a bounce, continues down almost to the next area, comes back, there's your next entry, not a lot of room, right? There's another one that closes below the zone with all the room. So let's rethink. Make sure that you're getting the right entries and see if they have room. And this was tight. What is that indicator? Oh, that's the bottom of the zone here. Oh, I like the way you did that. So probably somewhere over here gives you a little extra room. And I think a little creativity rooted in advantages is probably the path that you're on right now. Andy, 3 triggers through. Even though this was a short zipper, I knew stay out, divergence prints on the potential to break. It's not art, it's science. And divergence is the #1 killer. Nice read, Andy. Nice read. 2 triggers through, all the momentum. Attempt at the momentum trade, it fails, turns into a little snapback. Beautiful. Nicely done, Pete. All right, I like areas to enter, but zones are in the way. So when is it legal to enter into tight areas? In Nexgen fibs, there were times when experienced traders would trade into them. Seems it would be appropriate here on TV. So Paul, let's analyze it. And let's see where your entry came from. Oops. Let me get the prices too so we can line it up. Everything is down here, right? There's your close on the correct side of the triggers at 02. 0250 was your close on the correct side. 97.75 was your first sign of trouble. So you've got about $80, right? No, you're good. Your annotation's great. You're annotating your frustrations. You're not annotating your trade. So it's okay because we're going to go after both. So here's the question. And I like that you're doing this. And you know what? I took it earlier because, guys, when you have challenges, I take it seriously. I want to be a part of your solution. I want to give you everything that I know how to give you to help out. And where was that picture? And I want to say it was this one right here. So you had about 4.25 points to get to trouble. And that's $85, right? And $85 isn't $100. It's definitely not $200. But your risk on this trade is, well, you're risking about $100. Everything says down. There's nothing in the way. You've got the perfect entry. You've got all the good stuff, couple HVAs protecting. And when you hit that first target, Paul, at $85 with those small triggers down, right? That's the John Novak take and manage. $85, mine is $100. So when I take a trade, I want to see $100 worth of profit potential. 85, Paul, I'll round up and I'll manage when I get there. If I get to this area, I can go break even if I know that it's a tight trade. I can say, you know what, let me cover it in case it creates a bounce. let me take my risk off the table, right? Let me take one off at 85 and I'll keep $65 of risk on a trade. And worst case scenario is I cover my commissions. Best case scenario is it does everything that the large chart told me that it was likely to do. And it did. It did everything that the large chart said that it was likely to do. Does that make sense, Paul? Is that helping a little bit? Little light at the end of the tunnel, I hope? It's just, I've been in your shoes. Like, what you're going through right now is one of the most common things, I think. Awesome. You're welcome. All right. Third, good momentum, potential to break. Third trigger barely peaking. Don't get caught up in the bear trap divergence prints. Second, higher divergence. All the stuff, Andy. Just outstanding chart reads using that discretion to stay out of those potential losers. Miss Jen, upon entry, strong side, nothing but room. Pulls back to the midband, pulls back to the zone, and gives you this huge nonsense bar. So this is another great example. Let me make this a little bigger. And everybody in this room says F that risk, right? Everybody in that room says no freaking way, not gonna do it. And then it closes below. And Jen says, my large chart is perfect. And I've got more than enough room to get to a target with the close below. Just because I couldn't get in up here doesn't mean I can't get in. Hide behind the zone that it's already closed below and make some money. And Jen, you did that really well. So that's a good example of that line of thinking. When it closes below, clearly that's less likely to hold. Get in, hide behind it. You've got room because your large chart says you do. I like the way you did that, and it was so timely for the lessons that we're doing today. All right, this is Andy V. Andy V loves that outer band as an area. You've got triggers up, strong side of the triggers, and really nowhere to go into that outer band, Andy. It's tight, man. It is so tight. It looks like you got just above it, and you manage it really quick for 40 bucks. Entry late was not on paper trading. Supposed to be close of this candle. Had to turn on paper trading. That happens. And that's just kind of tough. You're flirting with the outside. When you're out like this, guys, when you're outside below that outer band, Andy, for me personally, it's 90% the only direction I will look is short, because this is like a strong trending market. And when you get to this mid-band area, it's dangerous. You don't know if they want to continue the small or the big trending market. So I like to let it get above a little bit before I start looking for longs. That's just me personally. Management was great though. You recognize that it just wasn't doing what it needed to do. And out for 40 bucks, man. I'll take that every day. Great management. And great entries create manageable trades. Everything says down. You let it get past the VWAP. I love that you draw the trend line there. And this is kind of cool. It breaks below, pulls back to the VWAP, closes below. You don't have a small chart entry. You're way out in the middle of nowhere. But this thing is just flying and past trouble. And you said, let me get on the good side of the triggers and make some money. Nicely done, Andy. Everything is screaming momentum. Nothing in the way. Path. Get back to the solid side of those small triggers and see if all that momentum and path wants to carry you. And it absolutely did. Nicely done. All right. This feels like a CAV chart. Good bottom. Triggers wide. Lots of strength. Look at his small chart. That's how you can gauge momentum on the small chart. And Cav says, all right, I'm not just going to jump in. I'm going to let it come up and get me. And it did. And easy money. Nicely done, Cav. Nicely done, Cav. Momentum and path. What a crazy concept. Momentum, path, Pete, this is the one you said that you were in. And I said, I bet you he jumped in somewhere up here. He had room to travel, rides all the momentum, gets paid, and when he loses momentum, because it's a momentum trade, he's out. Oh, I appreciate that, Cav. I am of the opinion that teachers are only as good as their students. There's that same momentum. That was your first entry. And then you got paid, and then when it came back as a momentum trade, you're like, wait a minute, there's more meat on the bone, and caught a little more. Nicely done again. All the momentum directly into a termination condition, but with every indicator pointing up, Cav finds a way. You guys seen Jurassic Park? Life will find a way, right? Traders will find a way to enter the market. The hard thing is waiting for the best entry. All right. It's my buddy Victor. Quick and easy trade. Those are my favorites. Love to have a win first thing in the morning. Triggers are down. Price is on the strong side. Smack into the middle of a supply and demand zone. And you just said, you know what? I'm going to take a shot with strong triggers. Didn't have room to targets. Made a decision. Small chart triggers rolled against you. You get in below the zone. And you ride it down to trouble. Nicely done, Victor. Nicely done. When I stick to what I know, things work out as they should. Triggers up, price on the strong side, space to the next trouble area. I want you newer users to recognize the annotations on these charts, that these men and women are talking about everything that they see. Small chart triggers rolled against me, price closed on the correct side, got in. Everything worked out. If anything, I could have managed my stop loss better and got more of the move up. Moved my stop loss $100 above entry point, and it came and got me. You chum the waters, right? Ding, ding. Getting back into the game, there's another trade on the screen that was the other positive trade for 245. This one was for 480. Nicely done, Victor. Dance with the girl you brung, my friends, right? If you know trend trades work for you, stick to trend trades. If you are a momentum trade rock star, stick to momentum trades, right? If going counter trend never fails you, you found your deal, guys. It ought to be right for you. All right, Miss Cindy. All the momentum, room to trouble. You take the entry, same one Cav took. And then let's talk management. And I think management's the opportunity on this one, right? And she may be at the dentist. This is going to be that small chart. What if you're a pirate? R. Then I just say R. Guys, when you see fibs and change, right? And she says bad management. First target was a tick above the fib. Should be just below the fib, right? And then holding this for a loser, guys, that's just not having your coffee in the morning. There's no reason to lose a trade that tests resistance 3 times and everything turns. Good stuff. And yeah, new users for the automated. John's annotation, his discretion video he just dropped in the room. Even if you're just a Ninja Trader user, that video is solid gold. Cav, smalls up, large rolling, beautiful termination, pull back to the area inside of triggers, getting out because you know that there's trouble above. Great job. Reading the room, right? I know where trouble is. I'll take a quick shot back to it. All right, quick managed trade. You know what's funny is when people say quick managed trade, a lot of times it means I broke my rules. Triggers down, price on weak sided triggers, space to next, since weak must manage with small chart. Small chart, triggers rolled, price close on the right side of triggers area, and mid band to conquer. Stop loss set, second profit target hit, first profit target raised, second got out. Again, this was managing aggressively, could have stayed a little longer and made it a move in my direction 3 bars later. Oh well, not my money. I'll take 220 for the first trade of the day with money. Took 3 minutes to make it happen. Close below. You get paid quick, and that's $100, guys. There's nothing wrong with $100. And then it bounces, and as it comes down, you're like, you know what? I'll add another 120 to it. And Victor, $220 3 times a day means that you buy me something nice for Christmas. So I love it. Keep doing it. Candle on large chart was higher when candle printed on small chart. Triggers down, weak side, pulls back to the area, close on the correct side, and from the weak side of the triggers, your mid-band becomes a management point. Andy, it's a perfect read. Everything says down. There's your close from the area, 100% on the rules. You know where the first trouble is. Absolutely beautiful. Absolutely beautiful. Fits everything. Would have been a good trade. I'm identifying more of these now. This is textbook, Andy. This is why I try to teach this one first. That's the greatest looking trade ever. Nicely done. We're getting through them, guys. All right. Accident. On purpose. System long trade. That was the accident. Whoops, jumped in. That was the real trade with momentum and path. Easy money back to trouble. Out with the divergence at the fib. Re-enter on the pullback with everything on the clear path. And managing it. Nicely done, John. Guys, if you have done any research on the automated system that Nexgen offers, it is momentum, path, and entry. It is momentum, path, and entry. It's everything that I preach for an hour in the morning. Triggers above the fib. So here's where the trade is, 44.50. I love it when you guys point where you're not entering, right? Triggers are above the fib. Well, sure they are, Cav, but you traded over here where they weren't. You take the entry, and off it goes. And it's a good look. Everything says up. We got 3 triggers through. Perfectly defined entry. Know exactly where the stop goes. And Cav, if you would have used the language, placed a limit order at the area inside of triggers, you would have got a better entry with less risk and more money. Nicely done, man. Simulator will change the way a man thinks. It really will. But that one phrase, area inside of triggers, is great. Who is this? Boaz, you caught the same trade John Novak took with the exact same look, the exact same reasons, and beautiful exit, making that money. And then when divergence prints, you got out right at an area inside of triggers. Little late on the entry. Maybe you needed to feel safe, but that pullback to the mid band inside of triggers was perfect, Boaz. 100%. Momentum trade. Everything says up, nothing in the way. I'm going to jump in and make money. Nicely done. Momentum and path, guys. Check out this annotation. I dig it. Pivot, stop out. All the momentum, room to targets, pull back to the mid band inside of triggers, get in on the correct side of triggers, money, money. Awesome. Who was this? Was this Master B? I know I got one in here. That was Jen. Jen, you write like a boy. Nice job. Nicely done. How cool is it? Check this out. There's her entry. Hold on. Oh, I deleted them. Jen's entry looks like Boaz's entry, looks like John's entry. Different continents, different people, different levels of expertise, all take the same trade. Perfect. There's a reason. Because when you have momentum and path, pull back to the area inside of triggers, off it goes. And Boaz, remember that a mid-band is a termination conditions. A mid-band is a termination condition if the large triggers are a full bar away. That's when we identify it. So you were not at all in that position. Could have entered a little bit sooner. First divergence. No, I love it. I did. I said that you write like a boy. It's hard to write with a mouse. Great trade, Boaz. Out at trouble. Out with the third divergence. Perfect management. Perfect management. See, now you're a little more impressed when I draw those scissors, right? Once again, odds favorable. Clear path because the large triggers aren't a full bar away. Pull back to the area inside of the retracement zone. Easy money, Boaz. All the way down again. Doing the same thing. Same thing, guys. Same look. Same advantages. Same rules. Momentum and path. Miss the area inside of triggers, so why not just take all the momentum? And Paul W., this is a good example, and this is for all of you guys. And I love this. If I take a trend trade with momentum, with a clear path, does everybody understand that this is where the market is most likely to go? On a large chart. Ooh, I need to change this back. Black. Arial. Okay. On a large chart. Whoops. Almost there. I'm struggling. Here we go. On a large chart. It wasn't that pretty. With this look, that divergence low is where the market should, I won't say should, where the market is likely to go. Does that make sense to everybody? Because this is a big part, and I think this is going to have a lot to do with what you're working on, Paul. So if the market is likely to go here with this look, if this is the rules-based entry, all Cav did is he said, I didn't get the trend trade. Maybe I was doing something, right? But with the expectation, that's a lot of freaking money. So he's in a little late. He's in below trouble. He's in below those one-to-ones, the divergence low. But he's still going with the expectation of the large chart. That's pretty awesome. And I think that we're starting to see this lesson come in a little bit more with you more experienced users, that by understanding where the market is likely to go, you're still finding a way to capitalize even if you don't have that very basic trend trade rule met. Nicely done, Cav. Good example, good lessons today. Isn't it funny how the universe provides lessons that you need when you need them? You're thinking late entries and poor management or trading skills? I think personally that you have to manage, right? So this one was down. In at 78, you had room to get to trouble. In at 78, perfect. You had room to get to trouble. You knew exactly where trouble was, and you closed out 32 ticks. Worked out beautifully, didn't it, Paul? That was until today. Good. We have to change. But this was you, right? Perfect entry, room to trouble. I'm sorry, from 55 to 78. That's a huge trade, Paul. So would you like to recant your statement that there is always something in the way? There's not. Dude, you nailed it. It's perfect. And late entries do need more practice. And guys, so Marlon, you're right. And let me say this. Late entries on the wrong trades, guys, are probably detrimental. Late entries on the wrong trade. These end of long are huge risks. All right. So what's bad risk, Paul? Is it a number? Let's talk about this real quick, guys. When the triggers are down, when everything is strong, when there's nothing in the way, when the entry is defined, right? What constitutes bad risk? And it could be a number. You might say, that number is too big. I don't care for that risk. But for me, and guys, I'm in a different place than a lot of people in this room, right? So what if you're on the strong side of the triggers and there's $7,000 worth of profit potential? Is a $1,000 stop really a bad stop? And it's rare that you get a $1,000 stop. Yeah. And guys, I think that risk sucks. If everything says down and I go long at an HVA line against everything, any risk is bad risk. If I'm trading directly into a termination condition, any risk is bad risk. If I'm fighting triggers, any risk is bad risk. But guys, if I'm looking at my chart and I'm like, holy smokes, mother of pearl, I have momentum, I have a clear path, I have an entry area, my number goes up dramatically. What I'm willing to risk on a trade goes up dramatically. And guys, you'll make the decision what's right for you. I can't make that decision for you. But Paul, I have trades where I have $150 worth of risk, and I have trades where I may have $600 or $700 of risk. And my conditions are so good that I'm okay with that risk. Uh-oh. All the momentum, clear path, pull back to an area inside of triggers, easy money. There you go. Yeah. But it takes a while, doesn't it? It takes a while to go from the mentality, I hope I don't lose, to I'm way more likely to win. And it's hard, guys, because losses affect us mentally as new users. But when you believe in the methodology, when you believe in your plan, when you believe in what is being presented, risk becomes really, who cares? They're going to have to come get me. Who is this? It's not very big, but man, it's perfect. I thought so, Master B. I mean, beautiful. Beautiful. This is one of those pictures that I could steal, right? And I could say, you know what? It's been a while since I've added to the study guide. It's been a while since I've made that bigger. Master B's perfect high probability trend trade. You're famous. You're famous. That's the pattern. It's the same pattern. Hope and possibility versus probability. That's right, Marlon. I hit my daily objective by 5 a.m., so switch to Sim. Since this is Apex account, they have a consistency rule. It desensitizes you to have a big day, because if one day is more than 30% your total profits, you can't take a payout until it goes below 30%. Exactly. You got to follow rules. Strong top. Tried to go short into fibs. Didn't work. Tried to go short into fibs. Didn't work. Guys, this is the testicular fortitude that simulator will provide you. The ovarian opulence. When it's just horrible, but you sell and hold. When it's not getting any better and you add on to your position, right? And you hold it through 32 flavors of bullshit. And then you get paid. Guys, if you're not in a position that Pete's in right now, where he is so comfortable with his trading plan, where he is so in tune with sticking to what is making him money, and you do this in real life and make $1,500 on simulator, breaking every rule, omitting every advantage, your brain is going to start trading in determination conditions. Your brain is going to trade against odds favorable momentum again. Your brain is going to start ignoring things because all it's going to remember is that big number, right? And it's playtime for Pete. Pete's made his money. Now he's just jacking around. I'll put a huge stop in with this look and we'll see what happens. It's like being a teenage boy. You go to a party and a girl's mean to you all night, but she decides to kiss you at the end of the night, and that's all you remember. You had to figure out, yeah, guys. Not everybody can go from sim to live, and have two separate plans. I would say most people can't. Most people can't. But then he gets it back together. He starts getting the potential, takes it down to trouble. Then he takes the trend trade, and then he gets back into his routine plan. Well, but your brain doesn't know, Andy. Andy said it's difficult because the money is not the same. Your brain doesn't know the difference between simulator and live. Your dopamine response doesn't know the difference between simulator and live. The anxiety and the nerves that a trade produces. Guys, I've seen people terrified to lose on simulator where there's zero real risk. And then they want to go live with an incomplete plan expecting to be confident. Termination of possible longs, absolutely. Strong triggers, potential to break. Take the jump in trade. And when the momentum trade fails, it turns into a beautiful trend trade. Write it down, get paid, turns into another trend trade, write it down, get paid. Who is this? Nicely done. I don't recognize this chart. That was Marlon. Great job, Marlon. Nicely done. All the momentum and path, no entry. Sometimes it's not your money. Would this be one of those times where you might say, well, they didn't get me, but now everything is going up. I could ride it. There's your chili dog right there. Nicely done. You're not terrified, just following rules mostly and treating as if it were real. So, guys, playing like you want to perform is one of the biggest things. It's the batting cages, right? In the batting cages, you're working on your form. You're working on that back elbow up. You're working on stepping into the pitch. And you're doing all of that. So when you're playing in the game, you're less likely to strike out, guys. So treat it like that. Had a railroad look right here. Strong trending market right up until the reversal bar. But on the way up, you bought the long on the correct side of the triggers. Andy, this is you, right? One off at the first area, two off at the next sign of trouble, and then when the divergence prints, you're out. Andy, beautiful. Guys, look at this. Andy, do me a favor when you do this. Hold on. You should have stopped out 30. Do me a favor when you do these, Andy. Give me a number. Tell me what you're making on these huge moves, if you don't mind. Because, guys, I'm doing Hall of Fame reels every day from your trades in this room. I'm taking the winners. I'm taking the awesome stuff. I'm taking all of your great trades that fit rules, and I'm putting them in a video. And they're showing up on Instagram. They're showing up on YouTube. And I'd love to not have to do the math. I will, because this is gorgeous. But nicely done, Andy. Just, I mean, perfect. This looks like John Novak. Oh, counter trend. Counter trend. The old three divergences. Let's go short look. Two off at first target. All right, Andy. Guys, this is what happens when you get good with stuff. John said with weekend triggers, with multiple fibs, with divergences coming off of one-to-ones right at the fibs, when my small triggers get below my large triggers, I'm going to go short to trouble. And guys, this is counter trend. This is such a nice trade. Ron, John Novak is a pirate now. He's been watching you. I saw him reference the chili dog in the other room too. And then he gets right back, and let's go the direction of the trade. Has to get here or no long for me. Spot at the triggers. It's all right, Andy. I don't mind doing the math. That's just me being lazy, just for next time. All right. No such thing as a very weak side, Andy. It's either weak, transition, or strong. No such thing as a very weak side. That creates an assumption and an opinion. Does that make sense, everybody? You can have strong triggers or you can have weak triggers, right? You can have a termination condition or it can have the potential. You can be on the strong side, not the very strong side, or the weak side, not the very weak side, or not the super crazy indifferent transition. Like, let it be easy, because when you start to add words, what you're doing is you're creating opinion. And your brain says, that's very weak. Maybe I shouldn't take the pullback to the mid-band with the close below. And Andy, that is the absolute perfect trend trade. Price went to the HVA line, 3 out of 4 contracts, don't split, 680. Short run up to 4 full numbers, don't split contracts. Watch and just take what you can get. Close if necessary. Just 2 full numbers on gold is $400. Did you take this one, Andy? Andy V? Did you enter? You didn't, did you? Can I ask? And guys, tell me if I'm wrong. I really do. I believe language is very powerful. Is it because you used that word right there? You just missed it? Okay. Just weren't present. That's okay. If you're not there, you can't take it, right? I have found that people will use words to keep them out of trades. The same way we'll use words to get us into trades. And your brain hears these things, and there's a very real correlation between what you say to yourself and what you believe. And if you omit very, and it's just weak side down, room to trouble, it's the perfect chart read. And if you say pull back to an area, close on the correct side, it's the perfect trend trade. Well, Andy, this is the look that I teach every day. This is the most basic trend trade you could ever take. This is rooted 100% in the KISS plan. And then the only thing that comes in where you have to start making choices, if you're following the checklist, is because of the weak side, I need to be aware and I would say willing to get paid at trouble, which means that you did the perfect job on the perfect trade. But if you guys are talking yourself out of these trades, that's the perfect trade. I mean, that's textbook. Nicely done. Nicely done. Boom, 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 boom. Lot of pictures today, guys. Lot of pictures today. And I apologize if I missed somebody's. I'm going to go through and I'm going to click on the rest of them in the room. I'm going to skip my break because you guys are keeping me busy, and I think it's amazing. John, Jen. It's the John and Jen show, guys. It's like a variety show. I like it. Andy V. And you say another chart missed the entry, but identifying more of these easier now. And again, Andy, perfect. And then Victor, you said that you think I missed this one. I apologize. What I will do is, is mess everything up. I'll put you at the front of the line since I missed it. My apologies. Jen's 3-year-old drawing on her charts again. And then Victor, is that the same one? Yeah, I love it when you're like, read my dang chart, Mark. I got you. Mike M. All right, let's go through. It's being weird using the snippet tool. Right on. Try reloading it, Jen. Sometimes just a reinstall helps. Killing it, reinstall it. I've had to do that before. All right, why did I not enter this trade? The triggers were down. Price was on the strong side, but it was right at a supply and demand zone with no space. Small chart triggers rolled. Price on the right side of the triggers, and the large chart said, no, 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 remember the pain you had when you did this. Went the other way. Good read. I don't know what you did here. Staying, avoiding the pain, and the loser. So this is pretty cool. So Victor, you said that the large chart was almost perfect, but you had nowhere to go. So you didn't take the trade, and you didn't take the loser. So once again, guys, the very basic, the core, the foundation of everything that I teach each and every day, helping you avoid losers that are unnecessary. Great job. Awesome, Andy. I'll round down for clarity. And it's already held, right? Great job. All right. I think, yep, we saw that one, Andy. There's just a Google tab for grins. All right, down, weak side, enough room to the one-to-ones. Close on the correct side of the triggers. Exit at HVA as its very weak side, and one-to-ones is near out. This is Hunter, not Jen. Hunter, down, weak, perfect, manage. Couldn't do it any better. A little late. And then, Hunter, I'm going to blow this up for you. I want you to see this. Dun, 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 dun. And maybe this will help. When I am talking about a close on the correct side of the triggers, I have one very specific criteria. And I'm going to make this as big as I can. If both corners of my bar where it closes are below the triggers, you close below the triggers. Does that make sense? And for me, that's been it. And it keeps me from doing the one corner in, one corner out, because those don't seem to work as well. But if both corners of the close of that bar are on the good side of those triggers, man, I'm in. I'm jumping in. Good stuff, man. Great picture. Wow. Odds favorable momentum. Beautiful entry. Stop makes sense. Watching this spot for maybe getting out. And then, guys, I want you to see what John did here. For my NinjaTrader users, for you guys that are using the automated system and the discretion, first of all, go watch that discretion video that John Novak said. You have to pay commission on the losers. You do. Andy, but if they're the right losers, cost of doing business. One of the discretionary exit conditions, guys, is a second lower divergence. And he talks about how to get back in. He will know that this potential divergence is true 2 ticks below that bar. And guys, he has virtually no risk on this trade because he is very, very in tune with his exit conditions. This is what learning to manage discretionary, this is what having an exit plan does for you. And I don't know what happened in this trade, but what I do know is that if things went bad, he has $20 of risk on that trade. 4 contracts, $80 risk on that trade. That is unheard of in the NASDAQ world. Pete, everything says down. You didn't take that one. You decide to take that one and make a little money. Nicely done. Yeah, no heat, right, Marlon? Smalls up, large rolling, pulls back to the lowest point from one-to-ones, the edge of small triggers above large 34, super low risk. And it worked out for him, and as he gets into trouble, he's there. That's a little more advanced, but it's good stuff. Yeah, Andy, I've done it. Guys, when you take the wrong trade, there's 2 avenues. You can hope that it works out for you, or you can just exit. And just exiting the wrong trade is one of the hardest things you'll ever do. But you usually lose less with the exit than you do the hold. All right. Up, strong side, room back to the zone. Pull back, but pull back is to where? Is to nowhere. And no room up, right, Jen? Just better to sit on your hands and do nothing. And yeah, and Andy, you're right too. Waiting for the right trade is hard. Waiting for the right trade is the hardest thing you guys will ever do. But let me ask, give me a why in the room. If you've ever had the day where you're so patient, where you wait for the best entries, and you maybe only got 4 or 5 trades, but it outproduced the days that you had 20, 30 trades. Anybody other than me? I'm going to put my why in the room. The fewer trades I take, the more money I tend to make. Because the fewer trades I take means the more I'm latching on to advantages, having an edge. And guys, you learn that edge in here. Patience is the hardest part. All the momentum. Guys, another just beautiful entry. Right at areas, right in triggers. Everything that we teach. You do better on less trades, Andy V. I do too. All right, strong side, room to trouble. Jen, did you sell the HVA line? It looks like 44. Out at 47. Looks like you got stopped out. And then you just jump back in. 32. And you're out break even. 4 at 44. Okay, you took 2 off. So Jen, one question. What kind of trade is this? It's a momentum trade? All right. I'm going to give you a little something here. All right. Do with it what you will. Whatever you want. Were they both momentum trades? Yes. All right. So Jen, I want you, this is one of my favorite things. Dun, 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 dun. Momentum trade. Remember that phrase. It was a momentum trade. Now, Jen, let me take this picture and let me put it on this chart. In order to take a momentum trade, one must have momentum. In order to take a true momentum trade, you have to have strong triggers. Does that make sense? And the one thing that you didn't have here was the strong triggers. And that may be why you couldn't seem to get that market to just scream in the direction, why you had to go twice. I love that you made money. I do. And you're really just in a market that is flying. It's just jumped the fudge in. And that's okay. I'm not mad at you for jump the fudge in. Because when it's screaming and there's nothing in the way, jumping the fudge in. So let's look at if you jump in at 44. I really think your initial stops, 44, 47. Your initial stop is right at the HVA line. Do you see that? The thing that was hopefully going to protect you. You've got to give it some room, at least above that HVA line. Give it some breathing room. Because the idea, and I was having this talk with someone yesterday, is when the market's screaming down like this, that HVA line becomes a little bit of a line in the sand. And maybe that'll help with management a little bit. Still, all the right reasons to jump the fudge in. And I'm glad you got paid. I'm glad you got paid. Very weak. Trigger's not very good. No areas. But you've got your large chart area. Close below the smalls. Right there. And maybe on gold, Andy, these large shard areas pay dividends. Maybe on gold, these large shard areas pay dividends, Andy V, because you don't have anything on the small chart. The small chart rules technically are not met. You are on the weak side of down triggers. There's just no area to trade from. You're hoping that there's one-to-ones and zones. And once again, just pulling that translation over using the large chart areas for your small chart entries. Man, you may have found the keys to the kingdom for gold, Andy. I don't trade gold, but this seems to be very consistent. I would keep studying it. Miss this. Schlep rock. No, snapback. Momentum, smalls, above. Just no areas for the trade. Once again, it's just a chili dog. And you did it beautifully, Jen. Just a chili dog. Another jump the fudge in and take it to trouble because you've got a freight train over here. And I couldn't be upset with you at all on that. Use the pink line. You waited for it to break above the pink line. It's just a chili dog. It is the perfect chili dog. Nicely done. Chili dog. It's just fun to say. I wish you'd eat one. When's your next trip to the States? I need you to book a flight. Get a chili dog. All right. Triggers up. Weak side. Whenever my meeting is. Pull back to the areas. If you got to close on the correct side, there's no room to run, Jen. And see how they've already reached the target 3 times? I think that's a great reason to stay patient. Odds favorable down. Reach the target 3 times. Weak side. No room. I guess I have to talk to John Novak. I'd love to do a seminar, guys. What would we talk about in a seminar for 2 days? All right, Mike M. Your charts are just so nice to the eyes. Odds favorable momentum, 2 triggers through, pull back to the area inside of triggers, stops where the market shouldn't go, out at the first sign of trouble because that's an area that could be problematic. Didn't happen, and you make money all the way down. Really nicely done, Mike M. Oop, and that was mine. That was the momentum trade. You're going to trade London time tonight. You have an AM appointment. Only enter with 4 triggers through because, man, sometimes it's so much smarter. So many of these AM 3 triggers through were bear traps. Less volume. Nicely done, Mike M. Guys, does going through everybody's charts help? Does seeing what people do, what is realizing that everybody takes chances, that everybody makes mistakes, that everybody, man, let me reload. Victor, I'm going to kick you out of the room. Not really. Guys, I love watching other people's trades. I really do. But I want you to remember, these are their trades. These aren't your trades. And you may not be able to do what they're doing yet, but you'll get there. There's FOMO, right? FOMO is the fear of missing out. The fear of missing out. I believe that there's something called FOLO, which is the fear of being left out. When you see other people making money and you're not yet, you feel left out. When you see other people managing great and you can't yet, you feel left out. And guys, that fear of feeling left out is I think, more damaging than the fear of missing out. Because you're watching people as a brand new user make all this money, especially if my brother shows up in the room for any amount of time. And you're like, how come he can make 10 grand and I can't find the right entry? Guys, it's because they studied momentum, because they studied the path, because they studied the entries. And this is so autopilot for the people that built the foundation that they don't miss trades the way you miss trades. But the thing is all of these guys that are on autopilot, nice read, Boaz, all of these folks that are on autopilot, guys, they all started somewhere. Everything's up. Clear path. Not momentum, right, Boaz? Not momentum, weak triggers, but probably strong trending market. And not an area inside of triggers. So you catch it on the way up. Did that have anything to do with the lesson that we talked about the other day? Because now you've got some place for your stop, and it's easy. Everything's set up. Great patience on the entry, Boaz. I love that. And it looks like just a little result of the conversation we had the other day where you could have a defined stop. Something's up with your range chart. It doesn't look like your market flow template is on it. The flash trade. Barely had time to set profit targets. Triggers up, price on the weak side, very little space to trouble, must manage on the small chart. Small triggers roll, bounce in the area, close on the correct side, and you went from 95 to 11 in probably a fraction of a second, huh? Probably a fraction of a second. 640 on this one. Victor, you're back. It's just a trend trade, right? It's just a trend trade. I love trend trades. Andy, it's so cool when TV people taking trades that match up with Ninja Trader people or the super smart guys who can trade both at the same time. Man, when they both line up, guys, it's awesome. When they both line up, it's pretty incredible. But I've been in short trades while my brother's in long trades between the two platforms and vice versa. So unless you're gifted like John Novak is, I can't do it. I can't do it. I can't look at both. I make bad decisions. I figured that out about myself. Miss Jen, same entry, same reasons, right off the mid-wap. I love that. And just beautiful. Close above. Your Noida did not take this trade. To be honest, hindsight, because the HVA and way in mid-band, you didn't get your money. Not your money. Overthinking a little bit. Right? First sign, everything's perfect. That's okay. Victor got it for you, Jen. That VWAP, guys, there's a reason I refuse to trade into a VWAP. They know where it's at. They know where it's at. And you can both make money with great management. Yeah. Maybe. Your close above was at 97. Your HVA here. So Jen, let's talk about, when is an HVA important? From a top or bottom, right there, to go short, right? Or a momentum trade to go short because the large chart says down. So be aware of it, but from your entry, it was 7 points in the distance. Be willing to manage. But this is the perfect trend trade, isn't it? Like, that is the ideal trend trade. That's the John Novak, take and manage. If there's no rules met for an HVA trade, I'm less likely to even notice it. And that was it. If large chart is up, stop looking at the short lines. I like that, John. That's going to work its way into the education. Because a pink HVA is a short line. Man. All right, John. I'm threatening again. I might let you teach this class one day. Was okay to lessen the risk. Once you're in, right? Get below the bar. Once it hits it, back it up behind a bar, right? And let it tell you that it's not going to go. Good stuff, John. Thank you for that. Andy Man, you made 80, jumped out, and JN might have been going the opposite with a psychic genius move. Yeah. Lucky with a boatload of experience. Isn't it crazy how a boatload of experience tends to increase luck? I gotta tell you guys, this has been one of my favorite days in a while because you guys have been unbelievable. Keeping busy, taking trades, finding money. My highlight reel is going to be huge today. It's going to take me an hour to go through all of your pictures. Um, and I'm excited about it. Whoops. I skipped John Novak. Let's see what John did. Never got the system entry. Didn't make the EMA. But with everything down, a little later entry. So once again, guys, here comes that lesson, right? If this was your trade and this says you're more likely to go to here, is it okay to get in a little late? Is it okay to manage? Is it all right to have that little later entry when the expectations are so much further down? I like that. That lesson has really been coming into play today. And sure enough, it made it right where the market was likely to go. Great top, pivot, stop out, bar fight. John said, I've got way more reasons to believe down than up, and if I can't have my best entry, I'm still going to ride that with the expectations of the large chart read. We've seen that lesson present itself about 10 times today. About 10 times today. Pretty cool. But guys, this is pretty awesome. If you're new and you wonder if the software works, scroll through the chat box. And what you're going to find, and I think this is the coolest thing, is that you're going to find that there's 3 or 4 variations on the trades that you'll see. You'll see trend trades from most everybody. You'll see momentum trades. And you'll see some people just jumping the fudge in because of momentum and path, guys. And John does have videos on tops and bottoms. And guys, if you go to the Nexgen YouTube page, there's so much knowledge. 60-second video series, little ideas on NinjaTrader, trade examples. I'm going to start working on the shorts. Yeah, we got to take some off. My classroom, live, every day. So if you're learning the rules, guys, every day in the first hour, no matter which platform you're on, go through. You'll get the rules, you'll get them talked out, you'll get them shown, you'll see examples, and then it's just rinse and repeat, guys. It's doing the same thing every day. Every day. So my NASDAQ read is, that's the S&P. My triggers are down. I'm on the strong side of the triggers. 54. I've got 4 points. If I get a pullback and a close below, I've got plenty of room to get back to trouble. We'll see what happens. Triggers are rolling. Not quite up or down. The VWAP is right there and it stopped the market cold. Nowhere to go up, nowhere to go down. What a great time to go make a sandwich. All right, guys, I'm going to take 2 minutes because I haven't taken 2 minutes yet. When I come back, tell me what we're talking about. Tell me what you need help with. If you're not finding the success that you think you should be having, show me. Show me what you're doing, guys. I promise you there's a fix. Promise you there's a fix. And if I don't know it, John Novak, the CEO, the creator of the software, the seer of all, will give me his 2 cents on everything you post. Typically 3 minutes later than I do. But guys, take advantage of these resources. I'll be back in 5, maybe 3. I don't know. Home stretch. Andy, you could watch Carson all day with Dom DeLuise, Dean Martin, Don Rickles, Buddy Hackett, even when he had local yokels and the pet squirrel. Yeah, Carson was good. He was. All right, Hunter gave us one. Let's see what you did, Hunter. Bounced off the VWAP again. That VWAP is bad news, isn't it? Rolled off of the zone, closed on the correct side, exited the zone. Hunter, picture perfect. Fit every rule. Fit every rule without hesitation. Hit the VWAP, pulled back, close above, out at trouble. Mom and son doing the same thing. Jen, you were like, fool me once, right? Not again. Great job, both of you guys. Different rooms, same thing. Do you guys holler out, here it comes, here it comes, here it comes? How hard is it to sit through all of that? I think this is one of the things that that has gotten really easy for me, guys, is once these roll, I'm so patient, ready to pounce. You walk a lot? That's awesome. My wife and I have offices right next to each other in the house in Austin, so we can yell through the wall if she's looking at charts. There's that continuation again. Bad top, doesn't go, apology. On the close on the correct side. There's that little snapback. Nicely done, John. Have to figure out how to put the VWAP in Ninja? Yeah, there's got to be a way, right? There's got to be a way. Oops, did we see that one? Oh, yeah, we just saw that one. Big Rat. I was talking about Boaz's trade. Something about a large chart bar and mid-band. Didn't catch. Let me scroll up and see. Was that the one we were talking? I think this is the one that we were talking about. So on his particular trade, Big Rat, are you with me in here? Can you see it? Or are you driving? He didn't have the best momentum, but he had an absolute clear path. And he didn't have the area inside of the triggers for his entry. So he just used the up bar. He used the confirmation bar to take the trade with the large chart advantages because he was having a little bit of trouble defining entry on the small chart. It was really just him. It was him saying, it's my chart, it's my trade, it's my money. I'll get in on my conditions. And he waited for the up bar because he couldn't define risk from below the triggers. So it was great use of understanding the basic concept to find a way to do more, which is neat. Yeah, Robin Williams explaining how golf was invented. He's talking about drunk golfers while he's on about 18 pounds of cocaine. It's kind of funny. Default indicator, not sure the settings to match TV. Well, get to work, John Novak. What are you doing? I don't pay you to sit around and play in this room. That's what you pay me for. Pick the... That's the second airplane reference this week in the room. That's awesome. Here's one of the things I want you guys to notice. When the triggers are up, the market tends to go up. Have you guys seen that? Have you noticed that? That when these triggers are down, the market does in fact tend to go down. And when they're up, the market does in fact tend to go up. What a great safeguard, like just from the get-go. There's a strong trending market in crude oil. No, it's okay, Big Ray. I'll find it. It was a short. Oh, I think it was a short that he wasn't in front of the computer for. Here we go. No, this was perfect. Strong triggers. 3 triggers through. pull back to an area inside of triggers. It's the perfect short trade. He just wasn't there. He missed it. He wasn't in front of the computer. But it was everything that we look for in a trade, Big Rat. Starting with momentum, at least 3 triggers through, room to trouble, and there's that darn language. Pull back to an area inside of triggers. And it's just, it's easy. Does that make sense? There's no secrets on this chart. There's no tricks or voodoo or witchcraft. That is just rock star trading. Embracing all the advantages and doing something great with it. Guys, I'm telling you, once you learn this, very basic stuff, guys, there's more to do. John, for you crypto traders, might be low on Ethereum. We will see. Might not. Who knows? But he's using trend lines, triggers not through zones. He's saying, man, if they're going to bounce, that's a good spot. Pivot, stop out, at support, at the bottom of the trend line. Worth a shot. And did you catch it on the way up, John? Did you let it spike and then go back up? Stop below the spike? Using the idea of where the market should not go if this is going to be a winner? Great job. And if that's really going to be a low, 1,500 seems like not much to risk for 12 grand. I'm rooting for you, John. Christmas is going to be nice this year. Guys, what would you like to talk about? We've got another 15 minutes or so. It's getting quiet in here, so I'm going to stop today's YouTube.